Welcome back. You're still watching Business Morning on Channels Television. Well, there are questions as to the fair value of the naira. Economists say when oil prices rise and balance of trade is in huge surplus, naira is stable. Meanwhile, policymakers believe that imported inflation and exchange rate pass-through are the inflation catalysts. Well, Michael Ogunremi, an analyst with Chapel Hill Denham, shares his thoughts with us on the naira. Hello, Michael. Good morning.
Yeah, good morning. Thanks. Yeah.
So what are your thoughts on the fair value of the naira, especially when you look at the first half of 2021? How would you say the naira performed?
Okay, so to start with, I would say that to determine what the fair value of the currency is, you need to study what the trend is in an unregulated FX market. Okay, what we currently have in Nigeria is the naira being determined, the fair value of the naira being determined in the I&E window. So there's a proxy that what the naira value is in the I&E window is a fair value estimate for what it should really be. But then again, it is important to cite the caveats that the I&E window is somehow quasi-regulated because you still have a bit of the CBN influence in that window. But that said, we believe, for us at Chapel Hill Denham, that the fair value of the naira ranges between 460 naira to 480 naira. And when you compare that to where the currency is currently trading, you can say that the naira is overvalued. A few days ago, the CBN came out to say that the naira is overvalued by about 10%. We honestly feel that it is even way much more than the 10% that the CBN quoted. But in terms of how the naira performed year to date, um, as of June 2021, naira lost about 36 basis points. When you compare it to the rates in the I&E window as at December 2020. 36 basis points is not too significant. We think it's a fair estimate, not so bad. But overall, what we can say is the exchange rate is somewhat elevated, but we think that the volatility has been low, albeit the naira remains overvalued.
All right, how would you assess the impact of inflation on the naira in the first half of 2021? And we're expecting the figures for June later this week.
Okay, so to speak to inflation, I'd consider two main factors, right? The first would be what exactly is the relationship between inflation, domestic inflation, and the prices of imports. And then the second factor would be what is the stickiness of imports in terms of what's the import dependence in Nigeria. So to start with, if you look at the market, if you go to the market normally, what you discover is whenever domestic inflation is on the high side, the prices of imported goods that are substitutes to those products are much higher. And I'll give you a very good example. You take the price of rice, for instance. A bag of imported rice is always more expensive than, most times more expensive than the domestic ones. Okay, and so whenever the price of rice spikes in markets domestically, importers bringing in rice from abroad sort of, puts extra markup, on their price. So that relationship shows that most times you have imported prices of imported substitutes being higher than the local comparables you have in Nigeria. And then you also have the high imports dependency that we have in Nigeria. If you check the Q1 2021 trade report that was released by the NBS, you notice that imports continues to expand, and this was also fostered by the fact that we had COVID in the system. Regardless of that, we still had the notch up in imports. So when you put factors together, the fact that we have high imports dependency and the fact that we have this higher pace of inflation for imported products compared to domestic ones, you've noticed that as long as we continue to have domestic inflation in the country, the prices of imported goods will be high, and because we have high import dependency in Nigeria, we will continue to have more pressure on the FX, on the naira, for imports demand, and that will sort of continue to depreciate the naira.
Unfortunately so. Well, in part of the first half of 2021, the naira depreciated against the US dollar, and investors an exporters window as the country's oil production improved. What were your observations in this area?
Okay, so it's quite an antithesis, right? I mean, so normally the expectation is always that whenever we have this bullish on oil price, the economy should improve. But we didn't really see that, recently. Um, Currently, oil prices, the bull run we have in oil prices is trending towards historical peaks. What we had in 2017 thereabouts. So, and there are speculations that it could hit $100 before the end of the year. How true that is, I really can't say. It's an opinion from some school of thoughts. However, the reason why we have not had, a significant impact from, the bullish run we have in oil price now, is due to some factors. First would be that Nigeria is not producing as much as it used to produce historically. Um, Prior to the pandemic, Nigeria's oil production was within the range of 1.8 million barrels per day to 2.02 million barrels per day. But currently, we're producing about 1.4, 1.5 million barrels per day. So, despite the fact that we have high oil prices, we're not producing enough to, you know, tap in on that gain. And of course, this is also because of the fact that there are OPEC quotas in place. But regardless, our production is low and we're not able to generate as much as we would have. The other factor that has sort of prevented the positive oil trajectory we currently have on the Nigerian economy is the fact that there were unplanned expenditures because of COVID. And it's quite logical when you have an external shock in an economy, you have to sort of incur some sort of unplanned expenditures, okay? And most of this expenditure were financed in dollars, which would definitely be paid from our reserves. That is another reason why we didn't really have much impact, of oil price in the economy. And then you also have CBN interventions in the markets. Between January and June, the CBN intervention in the I&E market was about $1 billion, and that is quite maybe compared to the size of external reserve, it might look not too significant, but it is something to also point out. So the impact of these three factors put together, has prevented the positive trends that we have in the prices now, impacting both the external reserve, both the naira, and both the economy in general.
All right, Michael, but where do you see the naira, in the second half of this year?
So to be honest, it's hard to tell. But there are factors, I can consider to say, okay, I think the naira, will play within this region. So the first would be that as long as we continue to have, if we continue to have this good run oil price till the end of the year, I think it's good for the naira. That's number one. Number two, if we sort of have improvement in foreign portfolio, FPI's flow to the IMD window, I think that's another good one. Um, um, Besides those two factors, if the government is able to expedite the sale of the Eurobonds, a planned $6.1 billion Eurobond, and the CBN is able to get those money into the external reserve coffers as soon as possible, and they can also sell, supply liquidity to the market as soon as possible. I do think that we might see some sort of appreciation in the naira. I wouldn't want to put a figure to it because naira is very volatile. I wouldn't want to put a figure to it, but there is some sort of upside we can see in the naira if these three factors come into play.
Well, in this first half, I think last month, the CBN adopted the NAFEX rate. What impacts have you observed from that action?
Okay, so I think that the NAFEX convergence that was done by the CBN was a step in the right direction. It's been a long time calling, and I think that it was good that they take that route. In terms of what the impact is, if you look at the I&E window, the average turnover between January and June, was within the range of 70 billion. But as After June all the way down to after May all the way down to June, the average turnover was about 1.6 billion. So when you speak, if I'm to speak to the numbers, I'll most likely say that turnover has improved, relatively because of the convergence, and it's pure logic because of the fact that we don't have um, um, a dichotomy in the windows. You don't have people considering whether to go to the CBN and get FX at the official rates or stay in the INE and get their FX. It has sort of improved, turnover in the INE. So you have people saying, as long as I'm indifferent, between both markets, it's the same rate the CBN will give to me anyways. Let me just play in the INE window. So I think that's that's the explanation behind why we have that improved turnover in the INE window. But if you come to the parallel market, you don't really see that trend there. And that's because of the fact that there is still a very wide parallel market premium currently obtainable in the market. And so to put it in to summarize, I'd say that the impact of the NAFEX convergence is much more biased towards the I&E window. We've not really seen a lot of it in the parallel market. And of course, you'd agree with me that more of the demand that we currently have for FX in Nigeria is biased towards the parallel market. And if you consider that, we can say that we've not seen as much impact overall of the NAFEX convergence in Nigeria.
All right, Michael, thank you so much for sharing your thoughts with us. An expectation on the Naira for the second half of the year. Michael Ogunremi is an analyst with Chapel Hill Denham. Thank you so much and enjoy the rest of your day.
Thank you for having me.